If we look back in, let's say, 2020, we had this double top that came in, and that came in at about $34. It then traded to a low of 22, and then slowly moved back up to this current level. And we really have to go back, as I said, 12, 13 years to see a point in history when silver had this kind of value. Of course, what everybody looks for is these big moves where silver either challenged or breached $50. And we haven't seen that in quite some time. So now that we've got silver at around 40, the next real level is about $42 per ounce. That's the level we want to see taken out.
Silver markets are gaining momentum as traders focus on critical price thresholds that could shape the metal's near-term direction. Gary Wagner, editor of THEGoldForecast.com and Precious Metals Analyst, notes that market participants are watching for silver to challenge the psychologically significant $50 level, a price point not seen in recent years. Recent trading data shows silver at $38.02 per troy ounce, up 0.85% from the previous session's $37.70, contributing to a substantial 31.58% year-to-date gain. Wagner identifies the immediate challenge at approximately $42 per ounce, stating that silver needs to decisively break through this resistance to maintain upward momentum toward the $50 target. Market analysts remain optimistic about silver's trajectory, with some forecasting a test of all-time highs in 2025 and potential new records between 2026 and 2027. Price projections include $50 for 2025 and $88 before 2028, reflecting confidence in the metal's long-term prospects. Wagner emphasizes silver's distinctive market characteristics, explaining that when the metal builds momentum, it tends to outperform gold both in percentage gains and correction magnitude. This volatility stems from silver's more reactive pricing behavior compared to gold, creating amplified movements in both directions. The bullish case for silver rests on multiple factors: its dual role as both a precious metal and an industrial commodity, its relative affordability compared to gold, and its accessibility for a diverse range of investment strategies. As market conditions evolve, silver's combination of historical value, industrial demand, and investment appeal positions it as a potentially strong performer in the precious metals sector. Before we dive in, don't forget to like, share, and subscribe to our channel. Hit the subscribe button and turn on the notification bell to stay up to date with our latest updates.
I've got a weekly chart up just to give you an idea so that I can pull back, historically speaking, the last time that silver hit these levels. We've got to literally go back to 2012. And so it's been 13 years since we saw silver challenge $40 per ounce. So this is really significant. If you consider what it's done, if we look back in, let's say, 2020, we had this double top that came in, and that came in at about $34. It then traded to a low of 22, and then slowly moved back up to this current level. And we really have to go back, as I said, 12, 13 years to see a point in history when silver had this kind of value. Of course, what everybody looks for is these big moves where silver either challenged or breached $50. And we haven't seen that in quite some time. So now that we've got silver at around 40, the next real level is about $42 per ounce. That's the level we want to see taken out. Typically, when silver is running, it tends to outperform gold both in gains as well as corrections. Silver is a much more volatile metal in terms of pricing. So whenever it's running to the upside, which is what we're seeing now, it will outperform gold without a question. But the reciprocal is true. When silver is correcting, the percentage declines are much greater, much more robust than what you see in gold. So that is just clearly the definition of volatility, where you do get these big price swings or quick moves from one price to the next. Yes.
Yeah.
If you're looking at silver as it moves up, you want to be able to dollar cost average on the way up to take advantage of those profits, but you don't want to be as aggressive in dollar cost averaging in profits as you do if it's moving against you. If it's moving against you, dollar cost averaging is one of the best tools you have, as long as it hasn't breached an absolute price point as to where you would have put a stop in the market, for example. This is where I would exit the trade. This is where silver's moved from a strong bullish cycle to either sideways or lower. And those are the points where you don't want to obviously dollar cost average, but effectively you want to have that tool to be able to capitalize and maximize profits if the trade is working for you immediately, or if it's trading within a range, be able to add to a position to effectively lower your entry price as you get in, unless it's hit your lower level target in which you would have said, no, I don't believe I'm still bullish on this market. And at that point, obviously, it's a point you'll want to exit. But strategically, you want to use that as a dynamic tool to effectively maximize profits when you're right, get a better entry price when you entered at maybe not the best opportune time, and take advantage of the dip down as long as it hasn't broken into a price point in which market sentiment has shifted from bullish to neutral or bullish to bearish.
Gold markets are navigating a pivotal technical juncture as the precious metal tests key support levels amid shifting economic conditions. Gary Wagner highlights a significant resistance line established from the June 14th high and identifies $2,300 as significant support, a level that gains additional strength from the 50-day moving average convergence. Trading data shows gold prices recovering toward $3,340 per ounce on Wednesday, rebounding from a two-day decline as investors digest recent inflation data and ongoing trade developments. Wagner emphasizes that gold's current position just below the $3,300 support level makes the upcoming trading sessions particularly critical. The metal's ability to reclaim and sustain levels above this threshold will likely determine its short-term trajectory, especially given the technical significance of the 50-day moving average reinforcement at this price point. The fundamental backdrop appears supportive for gold's longer-term outlook, with most market analysts and experts projecting continued price appreciation through 2025. Consensus forecasts anticipate gold reaching $3,634 by year-end, while more optimistic projections suggest potential gains to $3,653.60. Conservative estimates remain constructive, targeting approximately $3,619.67 for the precious metal by December. Looking ahead to 2026, analyst sentiment for gold remains positive, suggesting the current inflationary environment and monetary policy considerations continue to favor gold's fundamental positioning. Let's get back to the interview.
Today, on our daily charts, gold is close to breaching the 50-day simple moving average. And the simple moving average, the 50-day, is a important average that us as market technicians use to determine whether or not a stock or commodity, and we're looking at gold, of course, whether gold is in a short-term bullish trend. Above that moving average, we consider gold to be in a short-term bullish trend. So that's an important one. We look at the 200-day really for a much, much longer-term view of the market. That's why I don't have it up. But if you see on the chart right now, we do have, let me blow this up a little bit for our viewers, but as you can see, gold is trading just under the 50-day moving average. The simple moving average is at 33.46, and of course, gold right now is at 33.37.80, and this is basis the August futures contract. So that's important that our viewers note that this is not spot that we're looking at. Well, when we look at the chart itself, the low that came in on the 27th and Friday the 27th, and then on Monday, June the 30th, came in where it just was the lowest we've seen. Now, we've had a series of one higher low, and we've basically had a triple top, and that triple top has been absolute unbreakable resistance. That is the gold bar. That is what we want to see gold test again. It's tested it or close to on 3 occasions since April. So that's really if we're going to make a case for gold running in a bullish manner, it really has to tackle, challenge, and effectively on a closing basis move above this line here, which comes in at around, call it 34.65. And that's this triple top here. The fact that it broke below, we've seen it kind of challenged that before, but in each case it's been short-lived, but it also was short-lived. It didn't effectively move back up into the channel. So right now I've got a resistance line from this high here and the top of the real body here, the candle that formed on Monday, the 14th of June. And so that is a hard line in the sand that we want to see gold break above. In terms of downside, 3,300 is a strong area. You can see that it was a supportive area through the last week in May. And so it is an area that we want to see gold effectively hold above. And right now, that price point is also where the simple 50-day moving average is. You've got those two right at the same price point. So it makes it a stronger area in terms of a level that we want to see held. Right now, gold is not, but it's only flirting with it by a couple of dollars. So
yeah,
we'll have to see how that kind of unfolds throughout the next week or so. Well, I think it has to do with the fundamentals and sentiments. A lot of it has to do with the tariffs right now.
Yeah.
And so the tariffs are playing a huge role and affecting the financial markets across all of the asset classes, whether it's equities, currencies, precious metals. Nothing is free from nothing is able to escape the power of tariffs right now. And in some cases, such as gold, we see it's put pressure on there. In other cases, such as the dollar, we see that it's provided the dollar with pretty strong tailwinds moving it up through the range right now.
Silver has officially broken out in a significant way, signaling the start of a new bull market. Several key confirmations have now been met, and silver appears to have substantial momentum remaining. Technical analysis and evolving market dynamics have sparked renewed discussion about the impact of the ongoing silver market squeeze. Silver continues to demonstrate strong upside momentum, often outperforming gold during rallies, though it remains more susceptible to sharp corrections due to its higher volatility. Gold, on the other hand, is trading near a crucial support zone, with a firm resistance level still limiting its upward movement. The path forward for both metals will depend on whether these critical levels are held or decisively broken in the coming days. Could silver's breakout be the beginning of a long-term bull run in precious metals? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. Only 4.5% have subscribed, so hit the bell icon and turn on notifications to stay updated. Your support helps us continue to deliver the latest market insights to you and the entire community.